right, what's going on, everybody? It's Sawyer here. The market's just closed today. It's Friday, and I just want to share a couple thoughts, some things I experienced this week, kind of basic review. We won't look at the charts too much or anything, but other than that, I wanted to share some ideas with new or, traders who've been operating for a little bit of time. Everybody can learn to go back to the basics at points, and we all have to do it. But a lot of this is kind of going to be geared towards people who are kind of still struggling, working through, like they're basically new. And I want to share some things with you guys to help you build a solid foundation so that you can become, a good profitable trader a lot faster instead of banging your head against the wall 1,000 times like I have done and many other people on this journey have done. But ultimately, those are the lessons you might have to learn, and you just have to go through your own path. And there's really no guidebook for you specifically of what you need to fix for you to become profitable and consistent and successful at this. But I'm going to share some ideas with you that I wish I worked on a lot better, more intentionally in my earlier days. I've been trading futures for almost a year and a half now, so I'm still new. I am still new at this, but I have spent a lot of time doing it. Like for this year and a half, most days I have been able to either observe the markets and participate in the markets through the entire US sessions, or at least for a few hours, like a few hours in the morning or a few hours in the afternoon. I've traded Asia sessions. Sometimes it's more active than others. That's the evening, the PM. It's about 6 p.m. for me, so it's like 8 p.m. Eastern time. When that kind of kicks off, and like 8 to 10 Eastern is kind of a good window if you want to trade the Asia session. Sometimes it's just so slow that I get impatient, and that's kind of one of my problems. Is sometimes I want it to happen now. I trade momentum, so I need like movement, or I need to learn to set it and maybe walk away if everything is setting up right, and I find myself getting impatient and then choking off the trade too soon, which did happen this week on the Asia session for me. I was in a great trade. All my indications were there, the things that I look for, it was really good, but it was on the 5-minute time frame, so that's going to play out a little bit longer generally. And basically I was in the trade, I went and jumped on the trampoline, I was doing other stuff, I came back, I have my OCO, my bracket orders, so if one gets hit, it cancels the other, it takes me out, so I don't have any standing orders. But when I came and looked at the chart, it was like after 45 minutes, I was still in the trade. It basically almost hit my target by missed it by a point. So I stuck in it, because I was basically just fluctuating around break even. And then I took it in my room, I was watching TV, and then I was watching the chart, and I got scared out of the trade. Like it started kind of going down a little sharply against me. I exited, and wouldn't you know, it just went on to form like a base pattern, and then it went up and would have hit my take profit very easily. So that was a little frustrating, and those are the things that are going to happen as a trader. You're definitely going to experience stuff like that, but those are the things that I'm talking about. There's specific things to you that you need to figure out how you're going to deal with that and not get scared out of trades, unnecessarily. Like if I would have not been watching it, it would have been a good trade, really good trade. So, I'm just trying to work on avoiding that. Anyhow, let's get into one last thought about some of my experience this week in the market, and then we'll get into building a solid foundation. We won't make this video too long, but so along those same lines, yesterday I had a trade where I entered basically the market sold off pretty sharply. So this is the open of the US session bar, the first 30-minute bar. And then it just made these single prints all the way down, and that just means kind of one time framing is another way to say it. It's just, you know, lower lows, lower highs on these 30-minute bars. So like you could even, if you were able to enter somewhere in here and you had a trailing stop methodology, I mean, this is in hindsight, everything always looks great. You could have even trailed these 30-minute bars and basically caught this entire move. Now, that's easier said than done because this was a huge move. And like based upon my system, I should have been entering here, okay? But my sleep schedule's been messed up. I haven't been able to wake up for the US Open this week. I'm hoping to do better next week, but like in a perfect world, I would have entered somewhere in this bar. This was at 8 a.m. when it started really making that newer low on this 30-minute momentum divergence, and then these started turning down. I missed that, but I came in and I basically, we won't go into all the charts. We won't spend too much time on this, but this is just an example of things that you need to work on as a trader and things you're going to experience. So I was able to enter, actually, this was at 12:30, around 12:30. I literally had an entry here, okay, because there was a volume divergence, there was a 1 minute divergence, there might have even been a 5 minute divergence. And then I had this level marked out on my chart, okay. It was probably coming from like a higher time frame, 4-hour level. I literally entered here and I took a profit like right here for like $25. And then the market it went up like over 200 points into the close. So that is just things that you're going to experience, but that's part of my process after each day is to review how could I have maximized that trade, right? What indications or price action or different variables could I use as confirmation to stay in that trade for a bigger swing, okay? And you're never going to catch the whole move. You just get that out of your head because it might happen once in a blue moon, but if I were to get 40% of that move, that would have been massive. Or if I was able to add to the trade and leave it on a runner, like these are all things you need to work on. Anyhow, let's get into some ideas about building a solid foundation to help accelerate your learning curve to become the best trader that you can be as quickly as possible. And one of those things is just good habits. You need to establish good habits right from the start. That means being patient, waiting for something that you're looking for, which is another subject in itself we'll get into in just a second. Possibly limiting the amount of trades that you make in a day, sticking to it, having a max daily loss limit, and when you hit it, you don't adjust it intraday. It's a mistake I've made many times where I have a max daily loss limit, hit it, I expand my max daily loss limit because I think that I can, like this trade that I may have tried to enter like 2 times and then I hit my max daily loss, that now it's actually setting up. And sometimes it works and sometimes it doesn't. Most of the time what ends up happening is you just hit your new max daily loss limit, dig yourself a bigger hole, and it really takes a toll on your psychology. So this game, it's all about preserving not only your capital first and foremost, but your mental capital. Because if you want to do this day in and day out, and you get into a bad pattern and you dig yourself a hole and you start to feel discouraged, and now you're starting to feel desperate maybe, and you want to get back those losses, get back to break even, so you start making stupid mistakes like sizing up when you should be sizing down. Like if you're in a losing pattern, you need to be either sizing down or you need to be going to sim mode. You need to be trading paper, or just if you're in a prop account like on an eval or something, then you need to go to just pure simulation mode where it's not going to affect your account and you need to get back on a winning pattern, figure out what's going wrong in your analysis and execution, get back on that winning pattern, and then maybe once you hit like a certain amount of profit in that account, then you go back to your live account or your prop account, whatever the case may be. That's a good habit to start building right away, because trying to dig yourself out of a big hole by taking big losses on an individual trade or in a single day, or God forbid a week or month, it does take a massive toll on you. So that's something I've been trying to work on better as of late, is just avoiding digging myself a hole in the first place. Even if that means smaller profits right now, like tighter stops, things of that nature. I just don't want to get into a hole. I want to just kind of maintain the account either at break even or steadily small, profits and growing it each day at a time. Like this week for me was a break even week. I literally was profitable, like literally $2. It was like a 50% win rate. There was some missed opportunities. Like I was in some fantastic trades that I either got scared out of one, and then the other one I took a very small profit. So those are things that I need to work out of how I'm going to get better next time. Which should be part of your process, which is another part of establishing a good foundation as a trader, is having consistent processes and routines. So trading is all basically a series of processes. You have your pre-market process, you have your trading actually during a trading session process of how you're going to execute trades, how you're going to enter, how you're going to manage it, how you're going to exit, all that. And then there's aftermarket, when the markets are closed, when you're not trading. What is your process then for reviewing your trades, for possibly planning the next day, for analyzing the market, whatever you look at? So those are like 3 separate processes, right? That's going to help you, and those all need to be consistent, something you do every day if you're going to be trading that day or the next day. And just developing consistency in how you set up your charts and what you look for as a setup. So as a newer trader, it's always generally recommended that you find one strategy, one market, and multiple time frames. So you should have at least one higher time frame. So maybe you execute on the 1 minute or the 5 minute. You should also be referencing either the 15, the 30, the 2 hour, the daily occasionally, just for greater context. So and then here's another tip that I learned from a great teacher. She's a trading coach called Robin Dane. I found her on Top Step TV, but then I looked into a lot of her material. And one thing she says is you need to set up your charts, number one, as efficiently and cleanly as possible. No unnecessary indicators and things of that nature. And then from left to right, like if you have a process where you maybe look at the 30 minute, and then you look at the 5 minute, and then you look at the 1 minute, and you look at the volume, and then that's when you execute. That's how you need to set up your charts, instead of like jumping from here to there to there to there to there to there, and then you make a decision to enter. So I'll just show you real quick. This is what mine have looked like. So this is my 30 minute, then I have my 5 minute, then I have my volume, and then I usually will execute off of my laptop on the 1 minute. So that's that's an example of my process, and my process has been getting a lot more consistent. I've been feeling good about it. Number one, because I have these multiple monitors. So for the longest time, I was just trading off this one screen on the laptop, so I would have to click on different pages because it's not big enough to put up all these things on different, sections of the screen. I would click on one time frame, I would click on the volume, I'd click on this time frame, I'd click back to this one, and there's delay, right, for the page to load. even if it's just a second or two. And that's why traders have a lot of screens generally, because they're watching multiple either time frames or different markets or indicators that they use to make decisions right on the spot when everything lines up. Because you need to have multiple confluences, and a confluence is just basically a factor, like a supporting factor for a trade. And you should have, as a recommendation, general baseline, 3 supporting factors before you enter a trade, at least 3. Start there. Like, stop making snap decisions based on, the 1 minute time frame, just because this indicator, and you think that this is going to happen based off that. That's not enough. Like, for an example, for me, I look for a level. My process is, number 1, a level, trend line, moving average on a chart. Okay. So once we get to those levels, then I'm starting to look for overbought, oversold conditions on the stochastics, and additionally divergences. So I like the stochastic divergences, where one is they're all overbought. I use 3 bands. We could get into that at a different video, but this is just an example of what I'm talking about, like consistent process that I've laid out. So the 1, 2, 3 method, where the levels, the trend lines, moving average, then I start to look for how price is reacting around those levels or trend lines, and are the stochastics overbought, oversold, like all 3 of them, and then do we get a momentum divergence, and do we get a volume divergence? And so if I have a volume divergence and a momentum divergence, especially on multiple time frame momentum divergence, and on multiple time frames, sorry, I don't know if I already said that, but then that's like a home run for me. So there would be multiple confluences, like you have to enter at that point. And you need to get to the point of, when you're taking a trade, you're not thinking about it so much. You're not, like, if you have to squint your eyes and try to kind of convince yourself almost that, well, something could be happening here, this could be setting up, then it's probably not. Because the best trades, and the only trades that I'm looking for at this point, are the ones that are just so obvious that I don't think about it. I just have to enter, end of story, and execute my process. And that's what you need to get to. Have your one strategy, practice it the same way every time, the same way you enter, the same way you exit. Okay, the same way that you trail your stop or leave your stop where it is, because you need to develop ultra consistency in order to determine what's actually going wrong and what could be done better next time. Because if you're changing all these variables each time, it's going to take you forever to try to untangle that ball of yarn, so to speak, for you to actually see what's going on. So and one last point, I guess, about the trade that I entered, and it ended up ripping without me. I took a small profit. I didn't end up re-entering, even though I did see an opportunity to potentially do that. In the heat of the moment, sometimes your emotions get involved, and you're like, well, I am at a profit for the day. Maybe I shouldn't just re-enter at this specific point, because that's not normally where I would. The trade ended up running without me, and you can't really feel bad about that. So you need to, this is all about your emotions and stuff. If a trade runs without you, I'm starting to look at it like I should be encouraged by that, because I did have a fantastic entry. Like, my entry on that, people would kill for it. It's just, now I need to work on the part of recognizing when is an opportunity that's worth holding for a longer move, and when it is like a scalp trade. The reason that I got out of that so quickly is because it was a counter trend trade, and the trend seemed to be so strong, but at that particular point it ended up reversing. So that's part of my homework and process and review that I need to do to continue to get better. Let's see, what else do we got? And the last thing about building that solid foundation is after each day, write down 3 things that you learned, observed, experienced during that trading day. Maybe a mistake that you made that you should never make again, because that will accelerate your learning curve massively. I mean, it's almost impossible to do, but with learning anything, if you make a mistake, write it down, record it, and do your best never to make it again. That will take you so far, because do you know how many times that I have, trading these prop accounts, had losing days that are just way bigger than any winning day that I would reasonably expect to have. And that, again, takes a toll. It hurts your confidence, because now you're digging out of a big hole. It's going to take you a long time, generally. Stick to a consistent unit size. That's a mistake a lot of big traders make, is when they are in a hole, now they start to size up to try to get it back. And if you're doing that with real money, you're going to lose all your money, almost certainly. Unless you get lucky. Anybody could get lucky, anybody could gamble, anybody could do that. But if you want to make a living doing this, then you need to establish a repeatable, consistent, systematic process and stick to it every single time. And writing down the 3 things at the end of the day and reading them before the next trading session. That will help you out a lot as well, because you want to start to develop like your bearings in these markets. What are you even looking at? What are you looking for? What's price action behavior that you observe throughout the day? These things are all super valuable. Maybe there was a pattern. Lately I've been noticing, like, say you have a trend line, and then you get this kind of breakout of the trend line, but then price kind of starts to kind of coil around that trend line, on the opposite end of a trend break. Instead of like breaking out in a solid direction, it just kind of breaks out, and then it kind of weaves around that trend line in the same direction. That's one thing I've basically just want to know more about, what that phenomena is and how to recognize that. There's so many market patterns: spike in channel, a cup with handle base, or a double bottom, or triple top, or head and shoulders. You should study technical analysis, obviously. Anyways, I'm not really sure what else I want to share at this point. Oh, last point, okay? If you're struggling to find consistency and get better, a mistake I made in my earlier days, I'm still new, I'm still figuring out a lot of things, but wanting to make things happen, wanting to make money, focusing on the money solely, especially if you're in a desperate position where you need money, that's really going to be a problem for you. You need to get to the point where you say, basically, to hell with the money. I want to be a good trader. I want to be good at this. I want to be consistent at this. I want to develop skill. And I want to build my account consistently. Not rushing for a payout, never being impatient and desperate. Like, we all make mistakes and get impatient sometimes and do stupid things. But just say, to hell with the money. I need to develop a consistent process and approach that can prove to be profitable if executed, effectively and consistently. So that's the last point that I want to leave you with. And I would just encourage you, whether you're new or a little bit, more advanced in this game, it's always about, the fundamentals. And if you don't have a strong foundation, you really can't build anything worthwhile or, sizable or scale up, because that's the whole name of this game, is just you start small and you scale. It's the most scalable business in the world. You develop a process, you prove that you can do it and execute it. You trust yourself, you trust your methodology, and trust comes from like trusting yourself not to make dumb mistakes and go on tilt and all those things as well. And then you can increase your unit size. That's the name of the game. Okay, so a $20 profit on a day, you should be happy about that. You shouldn't be sad that you only made $20. You know, because this is where a lot of people also you go wrong, because now you're establishing negative emotions even around when you had a profitable day. So any amount of profit on a day or a week, you should be comfortable with and say that was good. Like this week, yeah, I could be a little bit, you know, I only made $2 literally. I mean, after fees and commissions and stuff, basically I made like $100, like $70, but fees and commissions took that, and I ended up with like $2 net profit. I broke even. That's somewhat of a success. You know, it takes traders a long time to get to even break-even status. And once you're getting to break-even status, you're likely just right around the corner of breakthrough status to actually starting to be consistently profitable and growing your unit size, your account, and so on. Because when you start at this, generally the process is you're going to lose a lot, you're going to lose less, you're going to break even, you're going to make a little, and then you're going to make a lot. And who knows how long that could take for you. It could take a year, it could take 5 years, it could take some people 10 years to accomplish that. There are people who have been losing traders for 10 years and they finally broke through, and guess what? They make a lot of money. Because those are the people who have done the work, they put in the time, they feel deserving of the success that they had because they have the screen time, they've done the study, the review, the process over and over and over. They've made the mistakes over and over and over. And then you get to a point of saying, I'm done. I don't want to make this mistake anymore. And then you start to really make a lot of progress. So, all right, it's getting a little long, but thanks, guys. It was good to talk with you. I'll talk with you soon. Wish you the best.